It feels like every time you check the market lately, it's another wild ride.
It does feel that way.
Yeah,
Uh,
1 minute things are up, the next they're down. Geopolitical tensions are simmering. Economic indicators are giving us mixed signals. And to top it all off, the S&P 500, well, it's dipped into correction territory.
yeah.
So it's definitely got some investors on edge looking for a little bit of a safer haven, something a little less volatile.
I can definitely see that.
And so today on the deep dive, we're going to kind of shift gears and dive into an investment that just might offer that stability you're looking for, that anchor in the storm.
Yeah.
And we're going to explore why sometimes what appears to be a boring investment can actually be a really smart move.
Absolutely.
Mm.
I think when the market gets a bit rocky, everyone starts looking for that solid ground. And that's exactly what we're talking about today.
Right.
We're going to be focusing on Federal Realty Investment Trust, ticker symbol FRT.
Okay.
Now, this is a REIT, a real estate investment trust. Basically, it owns and operates income-producing properties, shopping centers, apartments, things like that.
Sure.
And they distribute a portion of their profits to shareholders in the form of dividends.
Okay, so we're talking about a REIT with dividends.
Exactly. And Federal Realty currently offers a dividend yield of around 4.5%.
Okay, 4.5%. That's a pretty solid yield, especially in these times.
It is.
But, we always like to go beyond just the surface numbers.
Of course.
We want to understand why this particular REIT, Federal Realty, might be a good bet, especially if you're looking to ride out some of this market volatility.
Yeah.
We want to dig into its history, look at its track record, see what makes it tick.
Absolutely.
And I think you've got some really fascinating insights into that. So let's unpack it and see what makes Federal Realty potentially so unique.
Well, I think the first thing that really sets Federal Realty apart is their amazing commitment to rewarding their investors. And we're not just talking about paying a dividend. They have increased their dividend every year for 57 years.
57 years. That's incredible. That's longer than some companies have even existed.
It is a truly remarkable track record.
So that puts them in a pretty exclusive club, right?
It does indeed. They are known as a Dividend King, a company that has increased its dividend for at least 50 consecutive years.
Wow, a Dividend King.
Yeah, and get this, Federal Realty is the only REIT with that title.
Seriously, the only one?
The only one. The next closest REIT has a streak that's almost 20 years shorter.
So they're really in a league of their own.
They are. When you see that kind of unwavering commitment to increasing dividends year after year through good times and bad, it really tells you something about the strength and stability of their business.
Yeah, that's not just luck at that point. That's a philosophy.
Right.
So I'm curious, with a track record like that, are we talking about just a massive portfolio of properties? Like, how do they manage to keep this up for so long?
Well, it's actually not about owning the most properties. It's more about owning the right properties.
Okay.
Federal Realty owns about 100 properties.
Okay, so a focused portfolio.
Exactly. They really prioritize quality over quantity.
Oh.
And they focus primarily on retail properties, shopping centers, strip malls, mixed-use developments.
So like the places people go to shop and dine.
Exactly. And they're very strategic about where those properties are located.
Okay, so not just any strip mall.
No, they target areas with dense populations and high average incomes.
So affluent areas.
Exactly. Think about it. Retailers want to be where their customers are, especially customers with money to spend.
Makes sense.
And the locations Federal Realty chooses, well, their average population density and income levels are significantly higher than their competitors.
So prime real estate, basically.
Exactly.
And I guess even in a downturn, those areas tend to hold up better, right?
They do. People still need to shop. They still want to go out to eat.
Yeah.
And if they have the income, those prime locations are going to stay attractive to businesses.
So this focus on quality over quantity, this strategic selection of locations, I can see how that plays into their ability to keep that dividend streak going.
It absolutely does.
It's not just about growth for growth's sake, it's about sustainable growth.
Right.
And I bet that 4.5% dividend yield makes those turbulent market days a little bit easier to stomach.
Oh, absolutely. Having that consistent income stream can really help offset some of that volatility.
So this Dividend King status combined with their business model, it's a pretty compelling story, but let's put it to the test.
Okay.
Let's look back at how they've actually performed during past economic downturns, because that's really where you see what a company is made of.
Absolutely. And one period that I think really highlights their resilience is the Great Recession back in 2007 to 2009.
Oh, yeah. The Great Recession, that was a scary time for a lot of people.
Yeah.
Financial systems were teetering. There was a lot of uncertainty in the air.
There was.
So how did Federal Realty navigate those waters compared to other REITs?
Well, in 2008, when the recession was really starting to bite the average funds from operations, or FFO.
And FFO, for our listeners who may not be as familiar with REIT terminology, that's basically a measure of a REIT's profitability, right?
Exactly. It represents the cash flow that's available to equity holders, so it's a key metric for REITs.
Okay, so in 2008, the average FFO for REITs.
Yeah, the peer group for Federal Realty, their FFO actually declined by 2.1%.
So already starting to feel the pinch.
Right, but Federal Realty during that same year, their FFO actually increased by 7.5%.
Wow, so they're going in the opposite direction.
Exactly.
While others are contracting, they're growing.
Exactly.
Okay, so that's 2008. What about 2009? Because that was really the heart of the recession.
That was when things got really tough for a lot of companies, and the REIT industry as a whole saw a huge hit to their FFO.
Okay, how big?
Their average FFO declined by a whopping 33.2%.
Ouch, 33%. That's a huge drop.
It is. Now, Federal Realty wasn't completely immune. They did see their FFO decline in 2009.
Okay.
But it was only by 2.8%.
2.8% versus 33%. That's a remarkable difference.
It is. It was actually their worst year during that whole period. But even their worst was far better than the average for their peers.
So they weathered the storm much better than most.
They did.
But what happened after that, as the economy started to recover? Did they bounce back quickly?
That's another interesting point. In 2010, while their peers were still struggling with their FFO down another 20%, Federal Realty actually posted FFO growth of 2.6%.
So they're back in the green.
Yep. And in 2011, the trend continued. The peer group FFO was still down 3.2%, but Federal Realty's FFO increased by 3.1%.
So they recovered much faster.
They did. It actually took 4 years until 2012 for the average REIT's FFO to finally get back into positive territory.
Wow, so they not only withstood the downturn, but they bounced back much quicker than their competitors.
Exactly. And I think that really demonstrates the power of their strategy, focusing on those high-quality properties in those prime locations.
Absolutely.
It really helped them navigate those turbulent times.
So the Great Recession, that's one major economic shock. But of course, we've had another big one more recently, the pandemic.
Right. The pandemic recession was a different kind of challenge.
Totally, with lockdowns and everything changing so rapidly.
Yeah, businesses were forced to close. Consumer behavior shifted dramatically. It was a really unique situation.
So how did Federal Realty handle that?
Well, of course, it impacted them. Their tenants, especially those in retail and restaurants, felt the effects.
Yeah, I can imagine.
But what's interesting is that they still managed to maintain their dividend growth streak throughout the pandemic.
Really? So even through all that, they kept those dividends coming.
They did. They didn't cut their dividend.
That's impressive.
And what's even more impressive is that they actually used the downturn as an opportunity.
Oh, really?
Like-
So they weren't just hunkering down.
No, they expanded into a new market, Phoenix, Arizona, and acquired some other properties that were likely available at lower prices.
So while others were retreating, they were being opportunistic.
Exactly. And their long-term strategy is to redevelop these properties to improve their performance and value.
Okay, so kind of a buy low, fix up and sell high approach.
Exactly. They have a history of doing that, and it's been a key part of their success.
So even though the pandemic was a completely different type of crisis than the Great Recession, Federal Realty still showed that resilience.
They did.
They kept paying those dividends. They positioned themselves for future growth. It's a pretty remarkable track record.
It is. And I think it demonstrates that they could potentially be a very reliable investment even in the face of economic uncertainty.
Yeah, I think for anyone who's feeling a little bit anxious about the market right now, hearing about a company that's not only weathered these storms, but thrived in some cases,
Right.
It's got to be reassuring.
It is. And that steady dividend income doesn't hurt either.
Absolutely. So let's just recap for a second what we've learned about Federal Realty.
Okay.
We've got a company that's the only REIT with Dividend King status.
57 years of dividend increases.
57 years. It's mind-boggling.
A long time.
And they've achieved this by focusing on quality over quantity.
Right.
They carefully select high-quality properties in prime locations.
Exactly.
And this has allowed them to outperform their peers during tough economic times like the Great Recession and the pandemic.
Right.
All while consistently rewarding their shareholders with those growing dividends. And let's not forget that attractive dividend yield.
Around 4.5%.
Yeah, so when the market is feeling shaky, sometimes you just want that steady performer that keeps chugging along.
Right. Something reliable.
And Federal Realty seems to fit the bill.
I think so. And this brings up a really interesting question for you to think about.
Okay, I'm listening.
Given Federal Realty's long-standing commitment to growing those dividends and their focus on high-quality assets in those desirable locations, what do you think are the long-term implications of that approach, especially in today's world where economic uncertainty seems to be the norm? How do you think these investments that might seem boring on the surface?
How might they actually be the key to building a resilient and well-rounded portfolio that can withstand whatever comes next? It's something to consider as you're thinking about your own investment strategy.
Absolutely. It's all about finding that balance between growth and stability.
Exactly.
Well, this has been a fascinating deep dive. Thank you so much for sharing your insights.
My pleasure.
And to all our listeners out there, thanks for joining us on the deep dive. We'll catch you next time.
See you then.